Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Stocks and bonds slide after a Bloomberg scoop reveals the Trump administration is preparing to nominate Kevin Warsh as the next Fed chair. The US president says he'll make an announcement today. Meanwhile, Apple delivers record quarterly sales and an upbeat forecast, but warns higher costs could take a bite out of margins. Plus, dangerous moves. Donald Trump warns the UK and Canada against striking fresh business deals with China, following Xi-Starmer and Mark Carney's meetings with President Xi. Well, a happy Friday. Today is the day that we're expecting President Trump to reveal his pick for the next Fed chair, the successor to Jerome Powell. And Polymarket puts odds at higher than 90%. It's going to be Kevin Warsh. Indeed, we report it's going to be Kevin Warsh. And this is how markets are reacting to that. We've got the dollar higher, gold sinking. It had touched $5,500 an ounce. And we have yields higher at the long end of the Treasury curve. So this suggests that traders think Warsh is going to be a less dovish candidate than the other runners and riders in the race. We've got a lot of risk on the docket today, not just that pick for the next Fed chair. We also, of course, have the latest US PPI numbers, those coming at 1:30 p.m. London time. And we have a raft of European growth data to bring you as well. This hour, we'll bring you the French print. How much has that political uncertainty weighed on the French numbers? All of that to come. Let's set you up for the day ahead. Stocks have fallen and Treasury yields have pushed higher following that Bloomberg scoop that the Trump administration is preparing to nominate Kevin Warsh to be the next Fed chair. According to sources, the former Fed governor visited the White House on Thursday, and later on in the evening, President Trump teased his impending announcement.
What day will you be announcing your Fed chair pick next week?
Tomorrow morning.
Tomorrow morning. And do you know?
I'd rather say it tomorrow, but just an outstanding person and a person that won't be too surprising to people. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world, and I think it's going to be a very good choice. I hope so.
So someone who was on your short list, sir?
On my reasonably short list, yeah.
Let's bring in Bloomberg M Live strategist Mark Cranfield for more. Mark, it looks like a wild session after the Warsh news. What stands out to you?
Yeah, as you were saying earlier, that pretty much every asset class came into the action today, whether it was currencies, equities, precious metals. But possibly the most outstanding thing here was the steepening of the Treasury yield curve. We don't usually see big swings in Treasury yields during the morning session here before European markets even get going. But there was a significant steepening in the Treasury curve once people came to the idea that Warsh was going to be the choice to be spoken about later today. And I think people are coming to the conclusion that he could be a bit more hawkish than some of the other candidates were seen to be, and that he could be more rules-based as well, which would suggest that they would set a higher floor for yields than maybe some of the other candidates. So that's a suggestion that higher yields for longer, particularly affecting the 30-year part of the curve. We're heading back in the direction of around 5%. And that was an area which sparked a lot of concern last year. When we got there in July, it made markets pretty nervous. So people will be watching that very closely in case we get anywhere near that 5 handle again.
Well, yeah, traders had been pricing for 2 rate cuts, Mark. How's Warsh going to affect that outlook?
It's beginning to look pretty optimistic now. If you take into account that Jerome Powell and Lisa Cook will probably stay on the Federal Reserve, even though they're both for different reasons. Obviously, President Trump might prefer that they leave. That doesn't look as though it's going to be the case. And they will be 2 voices who may well dissent against any idea of trying to push interest rates down a little bit earlier. We've also just had a Federal Reserve meeting where only 2 people were looking for an immediate rate cut. So there's, based on the data as well, the unemployment situation would need to deteriorate pretty fast for the Fed to be doing quick rate cuts. So the idea that we're still going to get 2 cuts before the end of the year is beginning to look a bit optimistic, and traders may need to dial back on that, and that will affect obviously what's going on, particularly with currencies and with the equity market as well. So if you take away some of that boost to markets, we could be in for a slightly rougher ride and people had been expecting, particularly if we get confirmation today that Warsh is indeed the choice.
All right, Bloomberg M Live strategist Mark Cranfield, thank you so much. And I want to turn now to how Asian markets are reacting after that Bloomberg scoop on Kevin Warsh. Winnie Xu is here for more. Winnie.
Yeah, morning, Lizzie. It is a risk-off session in Asia today. But just remember, we were so close to calling it the best January for MSCI Asia earlier today until those headlines broke. And you can see that a bit of pressure here on the MSCI Asia down 0.7%. But bucking the trend really is Indonesian stocks here. JCI actually is up about 1%, rebounding from those sharp sell-off in the past 2 days as the CEO of the stock exchange resigned just a few hours ago, and regulators come up with a bit more market reforms. And that overall strength in the dollar, as you mentioned, is actually weighing on overall local currencies here in Asia, especially the Japanese yen as well. As you flip the board and take a look at where the yen is trading, we can see that the yen actually under a bit of pressure, weakening about 0.5% here. And that is actually supporting Japanese stocks as well. When it comes to the 2-year yield here, dipping about 3 basis points, coming after solid demand from that bond auction earlier today. And that goes to show that there is a bit of calm returning to the JGB markets as yields at these levels look a bit more attractive. Flip the board and take a quick look at the Asia stock, tech stocks, because earnings is really what we're watching very closely right now. Overall, the tech stock is still that biggest drag in our region today, specifically on concerns around these AI spendings and AI costs after earnings from Microsoft and Apple. Back to you, Lizzie.
Winnie, thank you so much. That's Winnie Xu in Hong Kong. Well, staying with that tech theme, Apple shares have fluctuated after hours trading after the company delivered record quarterly sales and an upbeat forecast. Bloomberg's opening trade anchor and, of course, host of Bloomberg Tech Europe, Tom McKenzie, joins me now. Tom, iPhone sales really were a highlight for Apple. Yeah. You said they were going to be, but where were the weak spots in these results?
Yeah, so there were some weak spots. I'll start with the headline number, which is $144 billion in terms of sales for the holiday quarter for Q1 for Apple, and forecasting revenue increasing between 13 and 16% in the current quarter, which is above estimates. And the iPhone 17 sat right at the heart of that, to your point. If there are concerns for Apple, on your question, it's around what we flagged yesterday, which is costs of inputs into Apple, and particularly when it comes to the cost of memory. These memory chips now, where we're seeing a lot of constraint, the producers, SK Hynix and Samsung, are not being able to meet the demand that they're seeing. And we know executives at those companies have flagged that electronics makers are going to have to see higher costs of inputs. And Tim Cook was asked about this, and he does see it impacting margins into the future, a bigger cost impact. So that is a potential concern for Apple going forward. This is a company that continues to have to wrestle with tariffs. There was an impact there of a little over $1 billion. Parts of the ecosystem as well were a little softer than had been expected, particularly things like the Mac actually saw sales falling. They also have some supply chain challenges around some of the chips and some of the AirPods as well. Services did really well. We saw 30% growth in services. And interestingly, and really importantly for Apple, China as a market came back very strongly indeed. They had a massive quarter in China. It's a country that is significantly sizable for Apple in terms of sales. But competition has been really red hot in terms of the domestic smartphone makers there. But Apple has now done very well. It's had a massive quarter. Sales up 38%, 25.5 billion. That is the best quarter in China in at least 4 years.
OK, so more than holding their own in the Chinese market. Of course, it's been a massive week for Mag 7 earnings. Yes. We've had Microsoft. Shares actually having one of the worst days on record following the company's results earlier this week. What happened?
Yeah, absolutely brutal session for Microsoft yesterday. If you look at a 3-day chart or a 2-day chart, you just see this huge drop-off like a cliff in the stock price. This all comes down to, again, what we discussed yesterday in terms of the fact that this is a company that saw CapEx spending on AI increasing 66% whilst growth slowed for its core cloud unit, the Azure unit. And that is very concerning for investors. Those who are more sceptical about Microsoft and its prospects say this is further evidence that they are not getting the return on equity and the return on income from that investment in terms of CapEx around AI. And it was that led to the concern. This was the second biggest drop in stock market history after Nvidia's almost $600 billion drop last year when the DeepSeek news came out. So it was historical what we saw. It was historic what we saw in Microsoft yesterday. And for those skeptics out there will be a reminder that for some in the AI space, this is a divergent story right now, but for some, the question marks over ROI are just becoming that much more acute, and Microsoft is at the tippy end of the spear at this point, at least.
OK, Tom McKenzie, thank you so much. Tom will be back at 7 a.m. London time, of course, with the opening trade. But still to come right here on Daybreak Europe, President Trump issues a warning to Xi-Starmer after he becomes the first British Prime Minister to visit China in 8 years. And we're going to discuss that with the former UK Business Secretary, Vince Cable. That conversation coming at 6:30 a.m. London time. But first, President Trump telling Iran to give up its nuclear programme as the US continues building up its military forces in the Gulf. We'll discuss that with Washington's strategy against Tehran next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's 6:12 a.m. here in London. Happy Friday if you're just joining us. And today is the day that President Trump says he is going to reveal his pick for Fed chair. Polymarket odds now over 90% for Kevin Warsh, who indeed we report is the president's preferred candidate to replace Jerome Powell. And here's a snapshot of markets. Futures down stateside, higher here in Europe, and stocks already selling off in Asia. Flip the board over and you can see long-end Treasury yields are higher. Gold and Bitcoin selling off. So these moves really suggesting that traders reckon Warsh is going to be a less dovish or perhaps more hawkish candidate, relatively more traditional than perhaps the likes of Rick Reeder, one of the other runners and riders in this race. But now, turning back to the geopolitics, the arrival of a US aircraft carrier strike group in the Middle East has given President Trump new options to carry out his threats to attack Iran. It comes as the European Union agreed to hit Iran with sanctions, including the designation of its Islamic Revolutionary Guard Corps as a terrorist organisation. Now, diplomats in Brussels were clear they preferred more diplomatic pressure on Tehran rather than military action.
This decision means that if we list them as a terrorist organization, then many member states have criminalized any activity or interaction with the terrorist organization. So that puts more pressure on this. When it comes to attacks, then I think the region does not need a new war.
Well, let's bring in Maria Martisiute now, policy analyst at the European Policy Centre. Maria, great to have you with us on the programme. President Trump is saying that he could use military strikes unless Iran comes to the table and agrees a new nuclear deal. Is that just signalling from the president because he's under so much pressure at home over Minnesota? Or do you believe that this is likely, given what we saw in Venezuela? Good morning.
Good morning. Thank you for having me. Indeed, you're absolutely right. It's quite difficult to tell at this stage whether it's strategic signaling or whether actually he's preparing military options for action. I think the very fact that he's made an investment into having this massive armada heading towards the Middle East and towards Iran probably tells us that he's preparing to strike Iran. Now, what would be his options? I mean, it could be a symbolic, limited strike on Iran in order to just show enough resolve from the United States. But I think it's quite unlikely to produce the change that Trump would like to see, which leaves us then with another option, potential regime change. And we've seen that in Venezuela. And I fear that Trump might be emboldened by what he achieved in Venezuela to try it out in Iran in order to then control Iran remotely. And let's be very honest, you know, Iran is a major player when it comes to global oil. It accounts for about 15% of global oil reserves. And this is also what Trump is after, probably.
But are the regime's days numbered anyway, as Friedrich Merz, the German Chancellor, has hinted, given the protests that are happening domestically?
Absolutely. So people are demanding change. And we've seen people come across generations and across different backgrounds into the streets, very much reminiscent actually of the 1979s. It's one of the bloodiest chapters in the Islamic Republic. And indeed, The problem is that internal security forces are still loyal to the regime. They're still, going after people and killing them. So if you wanted to produce a change from within, bottom up, this is where the bottleneck is. And perhaps this is also one of the areas that Trump will try to strike in order to, punish and penalize the people who are carrying out the arrests and the killings.
I just want to turn as well to Ukraine, because Special Envoy Steve Witkoff has been very optimistic on peace talks there. Do you share that optimism? Can the war end without Ukraine giving up significant territory?
I absolutely do not share the optimism of the United States, and we've been going in circles over the past year and actually over the past 4 years in terms of what is the main objective for Ukraine in this war. And we hear a lot of rhetoric saying, oh, it's 90% of the peace deal is being closed, but we haven't heard from Russia, for example. Have they accepted the newest European and Ukrainian amendments? We hear that, Russia opposes any kind of deployment of European peacekeepers or forces in Ukraine. We also hear that territoriality is still an issue, whereby Russia is demanding that Ukraine relinquishes Donbas, which is absolutely critical for the defense of Ukraine and actually impossible for Zelensky to give up without a referendum. So I think we're going in circles when it comes to Ukraine. I think much more pressure should be put on Russia on the part of the US. But again, we have a situation where US increasingly sees Russia as a trading partner. So options are very slim. I think one is continuation of war. Second, America might actually twist Zelensky's hand and, force ceasefire and force him to relinquish territory. Or third, add more pressure on Russia, but I don't see that happening. I see more pressure on Ukraine rather than Russia.
And meanwhile, we've had US, Danish and Greenlandic officials meeting to discuss this framework deal when it comes to Greenland. Do you buy that that's going to be enough to satisfy President Trump's obsession, frankly, with Greenland? Because it seems like not much has changed since before Davos.
It remains to be seen. It's hard to tell. I mean, in Europe, we're very relieved that these military threats and threats with trade tariffs have subsided now. And there's little information how the high-level technical talks, how they're going. But we heard Danish Foreign Minister Rasmussen say that actually he's optimistic, that talks are constructive, that there's progress. So there is hope that perhaps, enough pressure at home in the United States and here from Europe was put on Trump to actually walk back on his intentions, but it remains to be seen. The risks are still very high, and in particular when it comes to NATO, because this is not how allies work. You don't go around threatening annexation of sovereign territory. You don't go around putting tariffs here and there whenever you don't like something. So it really has alienated Europeans within NATO and within Europe more broadly.
Well, in terms of those risks, Maria, we're coming to the end of the week, but on Sunday night when I'm preparing for Monday morning's show, and I'm sure the same goes for traders around the world, we're all wondering what is the next geopolitical risk? What is President Trump going to announce into Monday morning? What do you expect that next risk we should look out for will be?
Well, I think it will be on two levels. One is definitely we need to keep our eyes on Iran. I think it might be just the beginning of a major American operation in Iran, which might, given the very fragile ceasefire we have in Gaza and lack of stability in Syria, have wider ramifications in the region. But also, I would encourage Americans to pay attention at home, because what is going on in the United States on the ground in terms of the enforcement of migration rules and the killings of the civilians is really a big threat, I would say, internally, domestically, for the Americans.
OK, Maria, thank you so much. That's Maria Martisiute, policy analyst at the European Policy Centre. Hope you have a peaceful weekend. Coming up, though, is Minnesota code red? The California governor thinks so, as he sharply criticises Trump's immigration crackdown. And we'll bring you more from our interview next. This is Bloomberg. California Governor Gavin Newsom has criticised the Trump administration's immigration crackdown, saying it is terrorising communities. Speaking to Bloomberg Businessweek editor Brad Stone, the governor said recent events in Minnesota are code red situation and should not be normalised.
What more evidence do we need? It's a stacking of all of these things. He is not screwing around. He tried to light democracy on fire when he lost the election, tried to light it on fire, tried to destroy this democracy. He's trying to ruin our republic. He's trying to torch it. What more evidence do we need on a day-to-day basis? All of this is part of that same narrative, that same thread. It's tragic what's happening. A 5-year-old, angelic young boy used as leverage and collateral. This madness, masked men, not even identifying themselves, no warrants, terrorizing communities. People dying, quite literally now dying. We said people will die. People are dying in the United States of America. And what is the threat today, to your question? Well, do what we legally can't do, or we'll continue to illegally do what we've been doing by terrorizing your community, by turning over people in local jails or whatever the hell else we want as points of leverage. None of this can be normalized, and none of this can be considered credible in the context of any of this renewed posture of the administration.
You talked about what the National Guard did in California last year. Do you worry that your continued emergence as a critic, as an antagonist of Trump, will bring the same pain that we're seeing in Minnesota back to California?
Well, I mean, I guess we can roll over, kiss the ring, put on some knee pads, do what the universities, the law firms, do what ABC did, Paramount did, do what Meta did, YouTube did. Do what so many companies are doing. Maybe get a golden share in the Golden State. I mean, seriously. And just watch it all disappear. I guess we can do that, or we can stand on principle, the rule of law, not the rule of dawn. I hope it's dawning on all of you. It's the rule of dawn. There are no co-equal branches of government. We have a supine Congress. The only approximation of a co-equal branch of government is the markets. Thank you. The markets. I mean, Bloomberg. It's the only thing he seems to pay attention to. He doesn't even pay attention to court orders. You saw that, the federal judge today. I mean, 96 specific attempts to completely deny court order, just since he's been involved in this operation in Minnesota. This is code red. But it's become so normalized. It's in our bloodstream.
Now to some other top stories we're following for you this morning. President Trump and Senate Democrats have reached a tentative deal to avert a disruptive US government shutdown. This as the White House continues to negotiate over placing new limits on immigration raids that have provoked a national outcry. However, lawmakers are almost certain to fail to enact the measure before a Friday night deadline, meaning a partial government shutdown is now seen as the most likely scenario. And President Trump says he successfully appealed to Vladimir Putin to halt strikes on Kyiv and other Ukrainian cities for a week. The move comes as Ukraine faces severe cold and power shortages due to damaged infrastructure from recent Russian attacks. Well, there really is one story in town when it comes to these markets this morning, and that is today is the day when President Trump says he's going to reveal his pick for Fed chair. Here's how the futures picture is looking. We're lower stateside, higher here in Europe, but already stocks are selling off in the Asian session. It appears that the candidate is going to be Kevin Warsh. Polymarket odds putting more than a 90% chance of that. And coming up, we shall discuss both the naming of the next Fed chair, but also the latest French GDP data. A raft of data coming this morning. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Stocks and bonds slide after a Bloomberg scoop reveals the Trump administration is preparing to nominate Kevin Warsh as the next Fed chair. The US president says he'll make an announcement today. Meanwhile, Apple delivers record quarterly sales and an upbeat forecast, but warns higher costs could take a bite out of margins. Plus, dangerous moves. Donald Trump warns the UK and Canada against striking fresh business deals with China following Xi-Starmer and Mark Carney's meetings with President Xi. Well, just breaking across the terminal, we have the latest fourth quarter GDP numbers from France. They are coming in at 0.2% of growth. That is bang in line with expectations. No reaction really when it comes to euro dollar, although the dollar is, of course, reacting more so to that expectation that President Trump is going to nominate Kevin Warsh as Fed chair. But this print from France really weighed upon by the uncertainty that we saw in this quarter, taking a bite out of investment perhaps and weighing on consumer confidence. But this isn't the only GDP print we'll be getting out of Europe today. Next up, we'll get the Spanish figure at 8 a.m, the German and Italian prints at 9 a.m, and the euro area figure coming at 10 a.m. London time. I mentioned euro dollar, but let's check in on these broader markets this morning, reacting as they are to the expectation that Kevin Warsh is going to be President Trump's pick for Fed chair. That to be announced today. The Bloomberg Dollar Spot Index is higher on this expectation that he is going to be less dovish or even more hawkish than the other candidates that have been in this race. Gold is down. It had been above $5,500 an ounce, remember, but coming off that now, down 4% as things stand, as we watch yields higher at the long end of the curve. So 489 is where we trade on the 30-year at the moment. Now, on the front pages this morning, as I say, there's one story in town, and the Wall Street Journal's leading on the former Fed Governor Kevin Warsh meeting with President Trump at the White House yesterday on the eve of the president's big reveal of who will succeed Jay Powell as chair. It seems that timeline moving up after their meeting, hence the market reaction perhaps. But turning over to the FT, they also have Trump preparing to nominate Warsh. Warsh, of course, was interviewed for the job in 2017, but eventually it went to Powell, whom he'd be replacing. But here in the UK, if we turn to The Guardian now, they have Xi-Starmer, the Prime Minister, opening the door to a reciprocal visit to Britain for China's Xi Jinping. And the Prime Minister's spokesperson saying the relationship's no longer in an ice age and not ruling out a potential visit. So we'll see how that goes down in London. But you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which, as ever, terminal subscribers can find by going to DAYB Go. Now, returning to our top story, our Bloomberg scoop that the Trump administration is preparing to nominate Kevin Warsh to be the next Fed chair. Let's bring in Bloomberg's senior editor, Alistair Bull, for more. Alistair, you've been a long-time Fed watcher. President Trump's been searching for a unicorn candidate, a loyalist, someone who's going to cut rates, command credibility on Wall Street and within the MAGA base, and importantly, get past the Senate confirmation. Does Kevin Warsh tick all those boxes?
Morning, Lizzie. Probably. I mean, it's going to be a narrow squeeze. There's a few other things to consider, not least the DOJ investigation of current Fed Chair Jerome Powell, which key Republicans on the Senate Banking Committee say they want to see resolved before they consider any nominations. But in terms of, Kevin Warsh is a candidate to lead the Fed, this really doesn't come as a surprise. He's been the front runner all along. He's been top of President Trump's mind since his first administration. Since that time, he's voiced at various moments remorse that he didn't pick Kevin Warsh. And, the markets have a fairly good idea of what they're going to get with him. There's a track record of what he said on monetary policy, recently more dovish, sort of signaling to the president, going back in the past to his time on the Fed, more hawkish. And I think you see some of that sort of being reflected this morning in the markets.
Well, yeah, there doesn't seem to be an asset class untouched by this morning, Alistair. The moves do suggest that Warsh will be less dovish or perhaps more hawkish than the other candidates.
I don't know about all of the other candidates, maybe Rick Reeder. It's situational. At the moment, the comments from Warsh suggest he's more focused on the productivity shock implied from the AI boom, which would be a reason to have lower interest rates. But he's also talked about shrinking the Fed's balance sheet, so-called quantitative tightening, which would be another reason to offset that tightening via lower short-term interest rates. I think the market's going to have to suck it and see a little bit. What he says on the outside is going to be different to what he's going to do once he is nominated and actually confirmed. And once confirmed, he's going to have to manage a large board, 19 for FOMC members, some of whom are rather hawkish themselves. So he's going to have to navigate that, build a coalition, and lead the committee in the direction he wants. He doesn't get to rule by fiat. He has to negotiate.
And that FOMC, of course, a guardrail on whatever President Trump would like his next Fed chair to do. Alistair, great to get your insights. That's Bloomberg senior editor Alistair Bull. Well, turning back to Europe, France's economy kept growing at the end of last year as households shrugged off political upheaval and the risk of austerity. It's the first of a host of European GDP numbers out this morning and comes ahead of the ECB rate decision next week. We can bring in Bloomberg's Europe economics editor Zoe Schneeweiss for more now. Zoe, good morning. Just walk us through the French numbers already and how they set us up for the rest of the European GDP prints coming out today.
So the French numbers, as you said, came in at 0.2. That's a slowdown from 0.5 in the previous quarter, which we know was quite an extraordinary quarter. So the slowdown shouldn't really be seen as too severe. Overall, any growth in France, given the current political situation, is a triumph for France, for the government. We know that there's been political uncertainty, budget uncertainty. Companies did actually cut back on investment, but households made up for that. And that just is generally very good news. And 0.2 is the number we're expecting to see also from Germany, from Italy, and from the euro area later today.
All singing from the same hymn sheet, it seems. So, Zoe, how does this set us up for the ECB meeting next week? Because our survey is suggesting they're not just going to hold rates next week, but for the rest of the year as well. It seems a long time ago when we had all that market reaction to the Isabel Schnabel comments on hikes.
Exactly. Hikes do seem to be moving further and further away. Economists in the survey that we conducted and the results were published overnight do say that they think that the next move is more likely to be a hike than a cut. Still, for the foreseeable future, there'll be nothing. The one question mark here is the current euro strength. That euro strength obviously would weigh on growth, could weigh on inflation. So it's one of those things that then does mean that one can't completely exclude that there would be a rate cut at some point. But again, let's see how long this euro strength continues.
OK, Zoe, we'll look out for your coverage next week of that decision in Frankfurt. Zoe Schneeweiss, Bloomberg's Europe economics editor. Thank you. Well, speaking exclusively to Bloomberg, Peter Wallenberg Jr., one of three patriarchs of Sweden's most powerful business dynasty, warns that Europe must work together to overcome geopolitical and economic challenges in a world that's rapidly changing. With the fifth generation nearing retirement, a younger, largely untested group is stepping into the spotlight. And Bloomberg's Francine Lacroix sat down with Peter Wallenberg Jr., one of the three men leading the family and in charge of succession planning. He warns despite living in unsettling times, his generation won't step down.
We will be around because I think that we need to do this together because the world is changing and the challenges are growing every day. We wake up every morning not really knowing what will happen from now on. And those are questions that we need to work with together.
How do you think the world is changing?
I think that all the questions that are coming out of North America right now is, of course, changing. The war in Ukraine, the Middle East, all of this that we in our generation haven't had in the same sense. We've been spoiled. There has not been that many conflicts of this magnitude at the same time. So I think that everything is very new for all of us. And we need to understand and help ourselves and the companies around us to work in a new reality.
Peter Wallenberg Jr. there speaking to Bloomberg's Francine Lacroix. And you can catch more of that interview and read more about the family's transition on the Bloomberg terminal. But coming up right here on Daybreak Europe, Bloomberg reports that SpaceX is considering a potential merger with Tesla, as well as an alternative combination with xAI. Another scoop for you. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:42 a.m. here in London. Now to our top corporate news. Tesla shares rose in extended trading after Bloomberg reported that SpaceX is considering a potential merger with the EV maker, as well as an alternative combination with xAI. Now, sources say any transaction could attract interest from infrastructure funds and Middle Eastern sovereign investors and may require a large financing component. Bloomberg's Ed Ludlow has this report.
There are two distinct scenarios being looked at. My understanding from sources is that there has been a consideration by SpaceX of a merger with Tesla, and the companies have looked at the feasibility of merging private SpaceX with publicly traded Tesla. Alternatively and separately, SpaceX has held talks with xAI, Elon Musk's AI lab, the maker of Grok, about a combination of sorts. And, you know, the only thing to add to that really is that there is a body of investors, I understand, that have pushed the Tesla SpaceX option. As you know, like, the background context is that we've reported SpaceX is preparing for an IPO targeting the middle of 2026 this year, in the hope at raising funds far beyond $30 billion, $40 billion, $50 billion, because they need capital to buy GPUs for space-based data center. Historically, like, it's completely normal for different Elon Musk companies to work with each other. There have been engineers that have worked on materials, for example, at both Tesla and SpaceX. xAI uses energy products from Tesla. As of this week, Tesla is an investor in xAI. It bought $2 billion of preferred equity in the Series E. SpaceX is an investor in xAI. It has participated in a prior round as well. So these are being looked at. Nothing is final, but both options are being looked at. This is Ed Ludlow for Bloomberg News in San Francisco.
Elsewhere, Amazon is said to be in talks to invest as much as $50 billion in OpenAI and expand an agreement that involves selling computer power to the AI startup. A source says OpenAI is also weighing a deal for Amazon to use its AI models in its products and for its staff. We're also told Nvidia and SoftBank are among others in talks to contribute to the OpenAI funding round. Meanwhile, Bloomberg has learned that US law enforcement has been investigating allegations by former Meta contractors that company personnel can access WhatsApp messages. We're told the claims have been examined by Commerce Department agents and separately in a whistleblower complaint to the SEC. Meta touts the app as having end-to-end encryption, and a company spokesperson says the contractors' claims are impossible. And the London Metal Exchange suffered a 1-hour delay to the start of trading on Friday due to technical issues. According to a notice seen by Bloomberg, a pause was applied to the LME's electronic trading platform while a technical issue was being investigated. Trading on the exchange, which sets global prices for all major base metals, finally started at 10 a.m. in Shanghai. It comes near the end of a tumultuous week for metals markets, with intense investor interest sending prices soaring. Meanwhile, Standard Chartered CEO Bill Winters says the lender will never move its headquarters to Asia. Speaking to Norges Bank Investment Management CEO Nikolai Tangen on his podcast, Winters said the London-based company would never want to choose between its two largest markets of Hong Kong and Singapore. Well, those are some of our top corporate stories this morning. Now, Hungary's top diplomat has described ongoing EU support for Ukraine as very dangerous. In an exclusive interview with Bloomberg, he also defended his country's growing consumption of Russian energy. The Hungarian foreign minister told us he did not agree with the European Union's strategy on Ukraine. Here he is speaking to Stephen Carroll.
We are absolutely not happy with the policy of the European Union on the war. Today, on the Foreign Affairs Council, it has been said very clearly, first time ever, by multiple ministers, that European Union is not prepared for peace. Oh my God, that was said clearly. European Union is not prepared for peace. By foreign ministers. I won't name them because it would be not fair. If they are brave enough to say this publicly as well, then you will.
Because we have heard the opposite said publicly.
Who were there? But I mean, public statements in many issues differ from what they say behind closed doors. I'm in a lucky situation because I say both scenes the same opinion. So what I can tell you is that it is very dangerous what European Union is doing regarding the war. It's very dangerous that they are sending and spending the money of the European people on the war. We are not ready to send any eurocent of the Hungarian people to Ukraine to operate their country and to bring more weapons.
But is it better then to be left aside in these decisions, and for those member states who do want to spend the money to move on separately? I'm just asking, as a process, is this a good way of moving forward?
No, I understand you, but for us it's not a matter of procedure. For us this is a matter of Hungarian national interest. We will not let the money of the European people be sent to Ukraine. As long as we are in office, it's not going to happen for sure.
The Hungarian foreign minister speaking exclusively to Bloomberg's Stephen Carroll there. Meanwhile, in the US, the New York City Mayor Zoran Mamdani, Bloomberg, that former state and city leaders are responsible for a $12 billion budget deficit as he vows to fight potential foreign funding cuts. Mamdani also told us that difficult decisions lie ahead as the city works to restore its financial stability.
The city's relationship with its wealthiest residents, most profitable corporations, also has to change so that we can bring this city back to firm financial footing. You know, as the mayor, I am legally required to balance the budget of this fiscal year and the next. That is something we are fully going to do. In order to do so, we have to deal with these structural problems.
You spoke about Eric Adams and Governor Andrew Cuomo, former Governor Andrew Cuomo. Where does the city council lay blame? State legislature? You didn't say anything about Donald Trump, who was president during some of this period of sort of instability as well.
I think there's no question that we are talking about a city's fiscal health also in the context of threatened cuts coming from the federal administration. Those are cuts that we're going to fight with every single tool in our toolbox. However, the $12 billion fiscal deficit, when it comes to the architects of that deficit, we're talking about the former mayor and the former governor. The reason for this is that the former mayor would under budget the costs of actual city services. We're talking about when it comes to access to shelter, or we're talking about cash assistance, sometimes even only budgeting half of the cost or 60% of the cost. And then here we are seeing a deficit grow to a level we haven't seen before. And amidst all of that, adding close to $2 billion in new expenses. That's the kind of gross fiscal mismanagement that we're talking about.
I want to, you talked a little bit about, the potential of these cuts. Saturday is the day where President Trump said sanctuary cities who don't change their policies could see cuts. Federal aid is about $8 to $10 billion annually for the city. What kind of conversations have you been having either with Washington, the White House, or here at City Hall about what the potential of those cuts could be come Saturday?
Well, I think we make very clear that our laws and our values are not bargaining chips. We are proud of what we have here in place in New York City. We will defend it, and we will defend New Yorkers. And look, the president said after our meeting in the Oval Office that the better New York does, the happier he is. And my job as the mayor of New York City is to make clear what these kinds of proposed cuts would do to this city that we both love. They would devastate this city. And so we're going to fight those kinds of threats. And also to make very clear that we have to prepare for every single eventuality, which is why it's so critical to not just turn to all of your reserves and say we can use this for one fiscal deficit if you know that the horizon is one that includes threats of this nature. You have to put yourself on a firm financial footing and ensure that you have the kind of reserves to prepare for a day like this.
The New York City Mayor Zoran Mamdani speaking to Bloomberg's Miles Miller. Let's check in on these markets because there's one story in town for them this morning, and that is the expectation that President Trump is going to nominate his Fed chair today. We report that's going to be Kevin Warsh. Indeed, poly market odds are now over 90% for Warsh, and you can see futures are sharply lower stateside, higher here in Europe, and stocks already selling off in the Asian session. Flip the board over and we have long-end Treasury yields higher on the 30-year. Gold and Bitcoin selling off as well. The 30-year there at 490, Bitcoin 82K, and gold coming off its high of $5,500 an ounce, down 4% at this point. So all of these market moves really suggesting that traders reckon Warsh will be a less dovish candidate, relatively more traditional, perhaps, than Rick Reeder. But we'll bring you more charts on this in just a moment. Plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Friday. And today is the day when President Trump says that he is going to reveal his pick for Fed chair. Polymarket odds suggesting that pick is going to be Kevin Warsh. We report it's going to be Kevin Warsh. He had a meeting with the president at the White House. Indeed, the odds are over 90% at this point that that person is going to be Kevin Warsh. Do you know how much is riding on this bet? Nearly $300 million, the total volume of this market. It's a big market, but flip the board over and you can see the market moves off all of this morning. We've got the dollar higher, gold selling off after it was at $5,500 an ounce this week. And so gold going up and down just as fast as each other this week. But speaking of metals, capping off a wild one this week for metals, we'd had a lie-in for the London Metal Exchange this morning. Flip over and you can see what happened to copper this week, surging the most in 16 years. But finally, when the LME opened, it did turn to declines this morning. We've got a lot of risk on the docket for today, not least the president's pick for Fed chair. That expected today, but we've also got out of the US at 1:30 p.m. London time the latest US PPI numbers, and we've already brought you the French GDP print, bang in line with estimates at 0.2% for Q4, but we have the euro area print as a whole at 10 a.m. London time and a raft of other numbers from across the continent as well. Let's check in on how these markets are doing in advance of Trump announcing his pick for Fed chair. We've got futures sharply lower stateside, higher here in Europe, and stocks already selling off in the Asian session. Flip over and there really isn't an asset class that isn't touched by this morning, but we've got yields higher at the long end of the curve. Gold selling off, as is Bitcoin. Plenty to discuss on the opening trade. Anna, Guy and Tom will take you all the way to the European Cash Open. Have a great weekend. This is Bloomberg.